This is The Golden Rule with David Fischer. For the latest information about bail-ins, bailouts, the economic collapse, and much more, go to landmarkgold.com.
Well, welcome to The Golden Rule. This is David Fischer, CEO of Landmark Capital, podcast number 29. I'm glad you're with me today. I want to bring you up to date on what's been happening in the markets year to date and give you some little market update, and also something that I've, since I lost my voice here for a week ago, I couldn't talk, therefore I couldn't do a podcast. So you're going to see a second one coming right behind this one. It's actually one podcast broken up into two, so they kind of piggyback each other. So make sure if you listen to podcast number 29 today, which you are, listen for the next one, 30, because it ties into what we're talking about today. And we're going to talk about something called the Dodd-Frank Act, which has been talked quite a bit about in the news. But before we do that, I'm going to share with you what's going on in metals versus stocks, because I wrote a newsletter that came out that's coming out in February that you can get free, and we believe in education, and obviously by listening to the podcast for free. All our literature, all our education newsletters, everything we do is we believe in education, and it is free. It's always been that way, and I want to empower you with knowledge. If you want to get the monthly newsletter, we don't give out your name, your address, your phone number, or email. Never have, never will. And this is one of many reasons why Carrie Lutz has decided to interview me in the past and endorse my company. So we have a February newsletter issue coming out soon, and you can get that by either calling my company at 877-448-2646 or go to landmarkgold.com, and it's called Stocks and Gold, Two Bull Markets You Don't Want to Miss. In the 23 years I've been doing this, there's a lot of misunderstanding. People say we can't have a gold bull market and stocks at the same time. They should work opposite of each other, and that's a kind of a myth more so than reality, because from 2002 to 2007, we had a bull market in stocks and a bull market in gold simultaneously, and gold outperformed stocks. They more than doubled during that period of time, almost tripled, in fact. Right now, we have a bull market in gold and bull market in stocks, and I said early January on national radio, many radio stations, about 800 across the country, a little over 2 million listeners with 4 different talk show hosts, and I also said in a podcast, look for January, I said look for 2017, we're going to have a bull market in stocks and bull market in gold simultaneously. A lot of great things that Trump's going to do. He's going to have some challenges. It's going to be a bumpy ride along the way. And actually almost everything that I said so far, 6 weeks into the year, has happened. Let's give you some numbers. Gold is up 7.2% year to date. Silver is up 12.5%, but it's not getting the hoopla that the Dow is, up only 3.8%. Now, I'm not anti-Dow. In fact, the S&P a couple of days ago passed the $20 trillion market capitalization number. So we're having some historical things happening, all because I think, and which is what I said it would happen, it happened. We have a president who's very business friendly, and he's trying to create economic growth in our country. And so you're going to see more of that. You're going to see a great bull market in stocks. You're also going to see a great bull market in gold. In fact, we're going to be, I believe, in both markets, a multi-year run. We're past the 7 to 8 year period of normality of when a stock market normally corrects. 2008 was the last time. 2001 was the time before. 96 before that. So there's a little bit of a historical pattern here. We should be having a stock market, but the environment does not dictate that right now. But I think it's going to come. If corporate earnings don't show up in corporations, watch the market correct 10% or possibly greater. Nothing like 2008, though. I'll be surprised. But we're going to have a bull market in gold. Without getting into all the details, I'm going to let you know about that in 3 weeks, 2 to 3 weeks, because I am writing a white paper and putting together in that white paper 6 major reasons, not 1, not 2, which is what most people talk about, or 3, 6 major reasons why we're going to have a bull market, and we're in the early stages right now of a bull market in gold, and also silver applies. I want to share with you, this is the first time since 2005 that I announced we're in a major, early stages of a major bull market. in metals. You'll see the facts on that when I get it written, and I'll offer it on the podcast. So look for that. It'll be something titled Major Bull Market in Gold. Get the facts, listen in. And so that says something about I'm not a get-rich-quick kind of guy, the sky is falling kind of guy, any of those nonsensical things that most metal companies say or you hear online or read online. But we're going to have a fairly consistent normal bull market in gold like we saw the last 15 years. We're going to see in the next 5 to 10 and possibly longer. But there's more fundamentals today than when I announced in 2005 this. And I was slow to announce it in 2005. It became very obvious. But the actual bull market started in 2002 in stocks. But I was ultra conservative. I didn't want to think this was a head fake. We're not in a head fake in gold right now. We're in a major bull market. The media is not telling us this. They didn't ever tell us this. But you're going to see and look back at $1,200 gold as a very low price compared to where we will be 4 to 5 years or greater from now. Again, I'm not saying like some people are saying $5,000 or $10,000 gold. But I'm going to say we're going to have higher prices, but not at those levels. And we don't have to have a financial calamity for that to happen. One of the things that's going to cause this is something I've been studying for 6 months, and I've not yet let the cat out of the bag fully, but I'm going to do that today, significantly, in detail. And that is 1.6 billion people very soon, 32 major central banks, and 112 billionaires very soon. The date is March 31st, and I hate to throw out dates like this, will have access to be able to buy gold for the first time in 42 years. What I'm referring to is the Muslim culture. Under the Sharia law, they have been forbidden to buy gold for 42 years. Now, on a side note, I'm not talking about terrorism. I'm not talking about this community, anything else than just a buying group that historically loves gold, that has been illegal to own gold, but now that is all changing. Let me give you the facts. The Accounting and Auditing Organization for Islamic Financial Institutions, or AAOIFI, announced in conjunction with the the World Gold Council, which was put together by the CEO of the World Gold Council, groundbreaking news initiatives for Islamic investors that now, and this was announced on December 5th, 2016 on a Monday, that somewhere around $1.88 trillion of Islamic finances will be able to be allowed, personally and corporately, be allowed to invest in gold. This will have effect on the gold industry as large. The date is, like I said, March 31st. Here's what is not going to happen on April 1st. It's not going to be an April Fool's joke here where you're not going to see gold double. You're not going to see gold make big jumps. I don't expect those things. I'll be very surprised if we see, gold moving up $20 or more that day, or maybe nothing at all. Because when I announced in 2005 a major bull market in gold, what I announced that as a result of what happened, a similar group of people. I'll talk about that in a second. But get back to the Islamic people. Standard & Poor estimates $3 trillion could flood into the sector in gold beginning March 31st. It's not going to happen on the first day, but they're creating a trading platform for this to work for the Muslim community and not break the Sharia law. They're also saying, they being another entity, the World Gold Council, announced that this is going to bring about 200 tons of gold being bought and taken off the market. Well, there's not 200 tons of gold out there for sale right now. So this is going to cause prices to make upward movements, but I expect a slow, normalized pace, not these outrageous numbers. This reminds me, like I was saying, of the time in 2005 when I made this announcement. Because in 2002, there was a group called the Chinese people that it was illegal for 38 years to own gold, and they opened up the Shanghai Gold Exchange in October of 2002, which allowed citizens of China to buy gold. And that culture is a culture that loves gold, just like the Muslim culture is a culture that loves gold. During the comparison, that allowed 1.2 billion people to buy gold. This is going to allow 1.6 billion people to buy gold. So a quarter of the world is soon going to be able to buy gold again, just like a quarter of the world was able to buy gold back in 2000 to the Shanghai Gold Exchange. And what happened after that on November 1st, nothing really happened in the gold market. In fact, it really did not take hold. And I had some competitors say, you're going to see gold double in the first week. You know, all this nonsensical thing. I said, no, it's not going to do any of that. It didn't take hold for a bit because the Chinese culture typically don't have a lot of high level of trust for their government. In fact, not a lot of governments have a lot of trust for Chinese governments. It's gotten a lot better, though. The miners, which was required to send their metals in for refinery and selling it through the Shanghai Gold Exchange, didn't trust that mechanism because it was government regulated, and still is. So it took a while, about a year and a half, almost 2 years, for this thing to really take foot, realize the government was going to steal your gold or manipulate the price or do all that stuff when you get into that type of ability to buy and sell gold. So it took foot. I waited about 6 months to a year to see the trend, and that's when I announced in 2005 a major bull market in gold, the last time I did that. This is one of the 6 components that I'm going to write about in more detail in a white paper that will come out that you can get, and I'll announce that on a podcast in about 2 or 3 weeks, like I was saying. So I want to mention that, and then we're just going to end the podcast talking about something that's in the news right now, and I want to give you the detailed update because I had a whole week to not talk about it, but to read about it, and I've done a lot of study. It's called the Dodd-Frank Act. You heard me talk about it before. I found a lot more information, though. I found out a whole bunch more information because they're talking about it again. And for those who have not heard this before, let me just give a quick overview. Dodd-Frank was created with a bipartisan congressional vote, signed into the law in 2010. This did many things, but it was supposed to create for the purpose of stopping what happened in 2010. It did multiple other things, though, unfortunately, like the main thing, it changed the legal status of your money in the bank or in a brokerage. Legally, no longer is your money legally, according to the Dodd-Frank Act. Reuters talked about this. Fox News talked about this. Mainstream media mentioned it. Most of it went on deaf ears. I started watching this way back then, and after a couple years, I said, you know what, there's way too much information out there. We got to start writing about that, and that's where I wrote a paper on the bail-in that Dodd-Frank revolves around, one of many pieces. There's so much happened recently with Dodd-Frank that I wrote a new update to the coming bail-in. It's been in its 5th edition. It is now coming back from the print shop in its 6th edition. And to put it into perspective, all 5 revisions previously do not come close to adding up to the 6th revision. The 6th revision is more than all the previous revision times tenfold. And most of it is written about Dodd-Frank, and also what I'm going to mention and talk about in detail in my next podcast, podcast 30, called the Consumer Financial Protection Bureau. So make sure you listen to that. Back to Dodd-Frank. Initially, it was 843 pages when it was created, signed into law. Now it's one of the second largest pieces of legislation, over 22,000 pages, second to the Obamacare health plan or the Affordable Care Act. It focuses on 5 primary areas: to change the legal status of your money, required enormous reporting requirements for banks, which that is something we're going to talk about in just a second, restricting banks from becoming too big to fail, which we're going to mention that, and create a fiduciary ruling for bankers, money managers, brokers, financial planners, and certain retirement like 401ks, restricting them to only lowered commission products. It also created the beast, the Consumer Financial Protection Bureau, or the CFPB, which will be for podcast 30. You got to listen to this. I learned so much last week, it shocked me, and you will be too. Back to what we're talking about today. Number 2, required enormous reporting requirements for banks. This became an obstacle in banks for lending. Therefore, that is why you did not see banks lend much money out in the aftermath of this bill being passed in 2010. In fact, most banks have not lent out money to small businesses from 2010 until present. And this is what Trump is in his wheelhouse, wants to change. And the reason they didn't do this because Dodd-Frank put a big obstacle in front of banks that required significant erroneous, I can talk for a living here, erroneous reporting requirements that most banks chose not to hire the extra manpower just to get this thing done to comply with the Dodd-Frank Act, so therefore they chose not to lend money except for the big banks, and big banks typically don't lend to small businesses. So this is why you haven't seen that. Trump is going to take that away. It's one thing he campaigned upon: grow small businesses, create a healthy economy, produce economic environment, put America back to work, quality jobs, and make America great. So this is in his wheelhouse, and this is what he's going to get done. He wanted to get done in the first 100 days. I don't think it's going to happen then, but I believe it's going to happen this year. That is something that's going to be changed. But let me clarify something. Congress have tried to repeal Dodd-Frank 139 times since 2010. It has never happened. It's always failed. President Trump, as well as his right-hand man in this area, Steve Mnuchin, Treasury Secretary, recently confirmed as such, both agree and both have announced multiple times they are going to modify this one section. Both have never said they're going to repeal Dodd-Frank. I think they understand it is really almost impossible to repeal, and it really is. They're not going to replace Dodd-Frank, but they're going to revise Dodd-Frank in this one section. And this is the only section that they've mentioned they're going to revise. And they're going to give this area a complete overhaul because it needs it. But the other 4 areas, changing the legal status of your money on your account is legally not yours, is not even being mentioned. Never has. Number 3, requiring banks from becoming too big to fail, that's never even been implemented in the Dodd-Frank bill. It was created, signed into law, but the law was never implemented. And so we've had banks growing at a fastest pace in history in the last 5 years. They are leveraging more money today, twice as much, 2.5 times as much today than what caused the financial calamity of 2008. They have not moved away from being too big to fail. They moved closer to it. The only difference is they have a little bit more money on hand, but not enough to stop if we have another domino effect like Lehman Brothers. So prepare yourself. I'm not saying it's going to happen next week, but I was talking about this with another entity called Deutsche Bank. They're out of the woods, but 90% of their revenue from 2005 to 2015, they reported, came from derivatives, which is what brought the system down with Lehman's in 2008 and what banks do. So that's not being changed. Created the fiduciary for ruling for bankers. That got passed off and not implemented. But creating the Consumer Financial Protection Bureau is the monster that we're going to talk about. But make sure you go to my website, sign up for the free newsletter on bull market and gold and a bull market in stocks called Stocks and Gold, 2 bull markets you don't want to miss. And also you can call in and we'll get you that new 6th edition, The Coming Bail-In. If you have not even heard about this, you can call my company, ask about it. There's no pressure here. We believe in education. Let's get some to you. You will be floored, surprised to see everything we put in this white paper that is clearly documented, mainstream, on where our country is going. So again, David Fischer, CEO of Landmark Capital. You're listening to the Golden Rule podcast number 29. Stay tuned for podcast number 30 and you're going to find out, did we really set up something that's unconstitutional recently? You'll find out on podcast number 30. Talk to you then.
This has been another installment of The Golden Rule with David Fischer. To stay up to date and find out the latest information, go to landmarkgold.com.
It's always been that way, and I want to empower you with knowledge. If you want to get the monthly newsletter, we don't give out your name, your address, your phone number, or email. Never have, never will. And this is one of many reasons why Carrie Lutz has decided to interview me in the past and endorse my company. So we have a February newsletter issue coming out soon, and you can get that by either The Golden Rule. This is David Fischer, CEO of Landmark Capital, podcast number 29. I'm glad you're with me today. I want to bring you up to date on what's been happening in the markets year to date, and give you some little market update, and also something that since I lost my voice here for a week ago, I couldn't talk, therefore I couldn't do a podcast. So you're going to see a second one coming right behind this one. It's actually one podcast broken up into two, so they kind of piggyback each other. So make sure if you listen to podcast number 29 today, which you are, listen for the next one, 30, because it ties into what we're talking about today. And we're going to talk about something called the Dodd-Frank Act, which has been talked quite a bit about in the news. But before we do that, I'm going to share with you what's going on in metals versus stocks, because I wrote a newsletter that came out that's coming out in February that you can get free, and we believe in education, and obviously by listening to the podcast for free. All our literature, all our education newsletters, everything we do is we believe in education, and it is free.
This is The Golden Rule with David Fischer. For the latest information about bail-ins, bailouts, the economic collapse, and much more, go to landmarkgold.com.
Well, welcome